We had a blowout GDP number last week, and nonetheless, most people are still calling for rate cuts. Do you expect September to be it?
Yeah, we're in the September camp for sure, and we think there's a great likelihood actually that we could get 3 cuts in 2024, and then 1 in the first part of 2025, and then kind of a pause that refreshes. We'll take a look at kind of the impact of the 100 basis points of cuts and see what that does for the economy. I think your point, though, around the GDP number is important because we've had a lot of cross currents in the economic data. There has been, some indication that the economy and the consumer are in good shape. And then you get anecdotes from companies and sometimes from the labor market that suggests there's some cooling. So I think being a Federal Reserve decision maker right now is an incredibly difficult job. And they want to be cautious, especially going into the election.
Kate, why 3? That brings you above consensus. What would cause the Federal Reserve to have to cut rates 3 times? Is that a sign of weakness or strength?
Well, it depends on how you cut it. I would say we're not as stressed out about the labor market softening too much, and that being the reason for the Fed to continue to ease in 2024. It's more about our expectation that we're going to have more disinflationary pressure over the course of the end of the third quarter into the fourth quarter. So I'd say that's a positive sign. And against that backdrop, we think consumption is going to be pretty good. So even if we're calling for kind of 2 to 3 this year, we're in the camp of a pretty good economy and nothing that looks like a recession in the very near term.